Hello everyone, welcome to lecture number 4. First, we take up with question number 1 today. We have already seen the formats of general insurance company in the last lecture. Now today we take up with the questions related to general insurance company. So initially today we will practice the questions based on only revenue account. In today's lecture we will understand only the concept of revenue account. In the next lecture, we'll take revenue account plus profit and loss account. And then in the concluding lecture, last lecture, we'll take revenue account, profit and loss account and balance sheet. So in today's lecture, complete focus will be on understanding the preparation of revenue account. All of you take out question number 1 of general insurance company and be attentive. From the following details, ascertain net premium, claims and commission to be shown in revenue account of the general insurance companies. Now here we don't have to make revenue account, we just have to make the schedules. Schedule number 1 which shows the amount of premium, schedule number 2 which shows the amount of claims, and schedule number 3 which shows the amount of commission to be shown in the revenue account. So revenue account is not to be made, only schedule 1, 2 and 3 is to be made, where we will calculate the net premium amount which will appear in revenue account, claim amount which will appear in revenue account, and commission amount which will appear in revenue account. So let us first do the markings and understand it thoroughly well, be attentive. Premiums, all of you mark it as P. Okay, premiums will mark it as P. Now you all can see that there are two columns, one is of direct business and the other column is of reinsurance business. So very first of all, direct business premium received 12 lakhs is P. In that whatever amount is receivable means it is outstanding. Okay, receivable means it is outstanding. So whatever is the amount outstanding on 1st April 2018 means beginning of the year, opening outstanding. Now beginning of the year, opening outstanding means it actually belongs to last year, but we have received the amount in current year. So whatever is outstanding of last year, we will minus it from this 12 lakhs of premium income. And 31st March 2019 means current year's outstanding. It belongs to current year, but we have not received that, we will add. Means in this amount of 12 lakhs, we will minus 60,000 and we will add 90,000. This all is related to which business? Direct business. Now if we come to reinsurance business, understand this. Premium is an income which is supposed to be received. So in reinsurance premium, whatever premium is received, that shows the reinsurance accepted. I repeat, premium income is going to be received because it's an income, it's going to be received. So here whatever reinsurance premium is given as received further, it means it is accepted, and normally premium income is to be received. So if they say we have in reinsurance, if they say we have paid any amount, that means it is ceded. Okay, premium being an income is to be received. So in case of premium which is supposed to be received, if we have received any amount towards reinsurance, then that is reinsurance accepted. If we have paid any amount, normally premium is to be received. When would we pay the reinsurance premium? When we have ceded and transferred that insurance to another insurance company. Okay, so keep this in mind, premium is supposed to be received. Further any amount received is accepted and paid is ceded. Here against received they say 1,80,000 means it is accepted. Within that same, in the accepted, opening outstanding we will plus and closing outstanding we will minus. And within that, if they say premium is paid, just now as I said, then that indicates it is reinsurance premium ceded. Premium is normally to be received. So in case of premium, if the insurance company has paid any premium, when would it pay? When it has passed on that insurance to other insurance company, then it has to pay and pass on the premium also to other insurance company. So premium is to be received. If we have paid any amount means it is ceded. Again that ceded Beginning outstanding we will minus. I'm sorry, here also make the correction. Opening outstanding we will minus and closing outstanding we will plus. Within seeded also, any amount of opening outstanding we will minus and closing outstanding we will plus. So three parts of insurance premiums are there. One is direct business, another is accepted, and third is seeded. Accepted is to be added overall, seeded is to be subtracted overall. But how will you find the direct insurance premium? 12 lakh minus 60,000 plus 90,000. How will you find reinsurance premium accepted to be added finally? 1,80,000 minus 10,500 plus 14,000. Same way, how will you find out reinsurance premium to be seeded to be subtracted finally? 1,20,000 minus 10,000 plus 21,000. So three parts of insurance premium are there: direct business, reinsurance premium accepted, and reinsurance premium seeded. In all the three parts, opening outstanding we will minus because it belongs to last year. Closing outstanding we will plus because it belongs to current year. And finally, in direct business, reinsurance accepted we will plus and seeded we will minus. Same way, let us understand the markings of claims. Claims means CL. Okay. Now direct business 8,25,000. Again, payable means it is outstanding. So same thing, opening outstanding we will minus and closing outstanding we will plus. In claims, opening outstanding minus closing outstanding plus. Now understand this. Premium is to be received, so I said to you received is accepted and paid is seeded, but claim is to be paid. So for reinsurance, if we have paid any money further, means we have accepted that from another insurance company. But if we have received any money further, means we have ceded, we passed on to other company. So their share we have to receive and then we have to give to our customers. Premium is to be received. So in received, if the word received is given, it is accepted. Paid is given, it is ceded. In paid, if the word paid is given, it is accepted. Received is given, it is ceded. So here when they further say that the amount is paid, then this 60 to 500 which is paid further becomes accepted. That we will finally add. But within accepted, opening outstanding we will minus and closing outstanding we will plus. Now claim is paid, so when they say received, then that means it is ceded. Ceded finally we have to minus, but within ceded, opening outstanding we will minus, closing outstanding we will plus. Okay. So once again, premium we receive. So received is accepted, but paid is ceded. And claims we pay. So paid is accepted, but received is ceded. Keep this in mind. Any amount received, further received is accepted and paid is ceded. Any amount paid, further paid is accepted and received is ceded. Further, commission, direct business 75,000 paid. See, paid what is given. So within paid, whatever amount is further paid for reinsurance, that is accepted, that we will add. And received, here the word received is given to you. In paid, received means it is ceded. When the word paid is given, claims, commissions we have to pay. So there if any amount is received, that becomes ceded, that we have to minus. Here outstanding amount is not given. So we'll be making this schedules. All of you pause the video and make the format for this schedule number and then amounts. I hope you all are done with the formats. First schedule we will make for insurance premium. So very first in insurance premium, we shall be starting with the premium of direct business. Okay, very first we'll be starting the premium of direct business. So all of you write down direct business. First in the inner column we'll record this premium of 12 lakhs. So all of you write down in the inner column 12 lakh rupees. Then in that, as we discussed, opening outstanding 60,000 we have to minus, closing outstanding 90,000 we have to plus. So from that we will minus outstanding on 1/4/18 Okay, 1418 we will minus, that is 60,000. Write it in bracket. Minus, so write it in bracket. And in that closing outstanding we will add. So add outstanding on 31,319. So that amount of 90,000 we have to plus. So in outer column we'll get 12 lakh. We have to plus, so sorry, don't write it in bracket. So 12 lakhs minus 60,000 plus 90,000 will be 12 lakh 30,000. In short, after considering the outstandings, what is the actual premium income on direct business for the insurance company? 12 lakh 30,000. Now we take reinsurance accepted. First we take reinsurance accepted. Okay. First reinsurance accepted, what is the amount? 1,80,000. That we write it in the inner column. 1,80,000. Now in that again exactly same. Less outstanding on 1418 we will minus and add outstanding on 31,319 we will plus. So what are the amounts? 10,500 opening outstanding we have to minus, 14,000 closing outstanding we have to plus. So all of it on in bracket, 10,500 and 14,000 which we have to plus. Now in outer column what we will get is 1,83,500. Okay, how do we get this? 1,80,000 minus 10,500 plus 14,000, that is 1,83,500. Now because it is accepted, what are we supposed to do with this? Add it. So keep it as it is. Because it is accepted, we are supposed to add it, so keep it as it is. Now we take reinsurance ceded. Okay, exactly same way, reinsurance ceded. In that we will subtract outstanding on 1418 and we will add closing outstanding, that is outstanding on 31,390. Now what is the amount first of all of reinsurance premium paid? 1,20,000. In that 10,000 we have to minus, 21,000 we have to plus. So all of it around 1,20,000 minus 10,000 opening outstanding and plus 21,000 closing outstanding. So 1,20,000 minus 10,000 plus 21,000, that is 1,31,000. Now this one being reinsurance premium ceded, we have to minus. Okay, because it is related to reinsurance premium ceded, we have to minus. So all of you write this in bracket. This 1,31,000, all of you write it in bracket because it is reinsurance premium ceded. Now final amount of insurance premium will get in the next column, that is how much? 12,30,000 plus 1,83,500, that is accepted, minus 1,31,000, that is ceded. So 12,82,500. Okay, 12,82,500 is the net premium amount that will be shown in revenue account. Okay, net premium to be shown in revenue account will be 12,82,500. So once again I repeat it, everyone understand it. Wherever there is opening outstanding, we have to minus. Okay, wherever there is opening outstanding, we have to minus. And wherever there is closing outstanding, we have to plus. Wherever there is closing outstanding, we have to plus. Further, as we discussed, whatever is reinsurance accepted's final amount will get added. Whatever is reinsurance premium ceded's final amount will get subtracted. Exactly same way now we have to do with the workings of claims also. So schedule number 2 we will make for claims. All of it around claims. Now very first in claims again also we'll start with the direct business. So within the direct business what we have is 8,25,000. In that we will minus 47,500 and plus 87,500. So all of it on claims, first of all direct business, same formats. direct business. In that we have to subtract outstanding on 1,418 and then we have to add outstanding on 31,390. Now what is the amount? Direct business amount is 8,25,000. In the inner column 8,25,000. In that we have to minus, what we have to minus? 47,500 opening outstanding. So we have to minus 47,500, so write it in bracket, and closing outstanding we have to plus, that is 87,500. So we have to plus 87,500. Outer column what we will get is 8,65,000. Now we will take reinsurance accepted. Okay, reinsurance accepted we will take. So in claims, as we discussed, we have paid the money. So further whatever amount is paid. Okay, in reinsurance we have paid the money in case of claims. So whatever amount is paid, that is accepted. So in claims also what we will do is reinsurance accepted will minus the opening outstanding, that is on 1,418, and we will add the closing outstanding, that is on 31,319. Okay, so first of all, what is the amount of reinsurance claim accepted? 62,500. In that 6,500 we have to minus and 11,000 we have to plus. So 62,500 in the inner column. In that 6,500 we have to minus, that is opening outstanding, and 11,000 we have to plus, that is the closing outstanding. So 62,500 minus 6,500, 56,000 plus 11,000, 67,000. Now 67,000, because again it is related to accepted, we will plus. Because it is related to reinsurance accepted, we will plus. Now we will take reinsurance ceded. Within ceded again we will minus outstanding on 1,418, that is opening, and we will add outstanding on 31,319, that is closing. First of all, ceded's amount is 50,000. Within claim we pay, so whatever amount we have received is supposed to be ceded. In 50,000 we have to minus 4,500 and add 6,000. Okay, so 50,000 minus 4,500 plus 6,000. So total amount what we will get is 50,000 minus 4,500 plus 6,000, 51,500. Now this, because it is related to reinsurance ceded we are supposed to subtract. So this 51,500, what we will do is we will write it in bracket. So what is the final amount of claim to be shown in revenue account? All of you do it. 8,65,000. Okay, 8,65,000 plus 67,000 we will add, minus 51,500 we will subtract. So 8,80,500. Okay, 8,80,500. What is this? This is the claims amount to be shown in a revenue account. Claims amount to be shown in revenue account. So again, exactly same thing, understand it properly. Everywhere whatever is the amount of opening outstanding we will minus, okay, within direct and reinsurance both, and whatever is the amount of closing outstanding we will plus in direct as well as reinsurance business, and then finally whatever is the amount of reinsurance accepted that we have to add, and whatever is the amount of reinsurance ceded we have to minus. And same way we will do the workings of commission also, but in commission we don't have outstanding amounts. So directly commission on direct business is what we will start with, and that is outer column. Because there are no outstandings, directly in outer column we will record 75,000. Okay, being no outstanding given in the question, directly in outer column we will record 75,000. In that we will add reinsurance ceded. Okay, accepted. We will add reinsurance accepted. So accepted amount is 5,500 that we have to add directly in the outer column, 5,500, and then we will subtract reinsurance ceded. Now reinsurance ceded is 7,000 that we have to minus. So that we will write it in bracket, 7,000. Because we have to subtract, we'll write it in bracket. So 75,000 minus 5,500 plus 7,000. 75,000 plus 5,500 minus 7,000, that is 73,500. 73,500 will be the amount of commission to be shown in revenue account. So I hope everyone is clear with how to make these schedules to be shown in the revenue account. Okay. So being the first question, we just understand in detail 3 schedules: net premium, claims and commission. Now before we take up with the next question, we will have to understand one concept of reserve for unexpired risk. So all of you take out your study material and understand the concept of reserve for unexpired risk first. Yes, all of you take out page number 3 of your study material. In that you'll find 14th point of reserve for unexpired risk, which we had kept pending in the terms in the beginning, particularly because it was related to general insurance company only. So we had kept it pending at that point of time. Look at it, be attentive. Understand the concept of reserve for unexpired risk. See, it is very, very simple. As in banking final accounts, we had come across rebate on bills discounted. Exactly same is the concept of reserve for unexpired risk. See, if I ask you, when do you take insurance policy? Then do you always buy the insurance policy on 1st April? Are you an April fool? Are you a fool that you will buy the insurance policies on 1st April only? If you buy a car on Dhanteras, if you buy any house on Dashera, Diwali, or when any good offer or scheme has come in the market, then at that time you will have to buy its insurance policy also. So by default, throughout the year, insurance companies keep on selling the policies. The premium income what they receive is valid for 1 year, which every policy what the insurance company sells will expire in the next year. Every policy, even if on 2nd April, insurance premium is received by the insurance company, then 2nd April to 31st March, 364 days will belong to this year, but 1st April, 1 day will belong to next year. So every amount of insurance premium what the company receives, some amount belongs to current year and some amount belongs to next year, because the risk is going to expire for the insurance company in the next year. Insurance company has to keep a reserve for that, because that compensation, if it arises in the next year, it is related to this year. Policy was purchased in this year, but compensation company may have to pay in the next year. That reserve kept aside for the unexpired risk is called reserve for unexpired risk. In simple language, for insurance company, it is a pre-received income. Okay, what is it for the insurance company? Pre-received income, like rebate on bills discounted. Because whatever premium insurance company receives, some portion belongs to current year, some portion belongs to next year. Whatever portion belongs to next year is considered as pre-received income. Company has to create a reserve for that, because the risk will expire in the next year. The compensation, if claim arises, may have to be paid in the next year. So look at this page number 3 and understand this point in detail. This item is peculiar to general insurance business only. You don't have this in life insurance. It simply represents the income received by the See here, income received by the insurance company in advance. What did I say? Pre-received income in the form of insurance premium. Since the insurance company charges premium in advance, it is appropriate to carry forward a part of the premium income received by the insurance company during a particular year to the next year to meet any loss that may arise with respect to policies issued during the preceding year. As a corollary to this or of this, reserve for unexpired risk has to be created as the amount representing that part of premium return which is attributable to and to be allocated to the succeeding accounting periods, and now this is important, shall not be less than required under section 64 subsection 5 subsection 1 subsection 2 subsection B of IRDA Act as given under. Means minimum this much percentage of reserve is to be created. Companies can create more than that, but not less than that. You have to remember these percentages, because even if not given in the questions, we have to follow the same percentage. What percentage? Fire and miscellaneous business 50%, marine cargo business 50%, and marine hull business 100%. Now in marine you will see there are two categories. So if nothing is mentioned, you take it as the marine hull business. I repeat, if nothing is mentioned, then you take it as the category of marine hull business. Okay, so you all remember that except marine hull business, everywhere else you have to create 50% reserve. Except marine hull business, everywhere else you have to create 50% reserve. Hull business 100%. In short, marine business given in the question 100%, other businesses 50%. Moreover, an insurance company may keep additional reserve. As I said, this is minimum. So they may keep additional reserve if it feels the necessity. The treatment of reserve for unexpired risk in the final accounts of the insurance company is as follows. Now this treatment is given very complicated, so you all remember the concept in simple language. Understand that? See, in simple language, what you all will remember is simply, as it represents pre-received income, if it is opening means in the beginning of the year. So opening means last year we received the income in advance for current year, so it actually belongs to current year, we will plus. Whatever is opening reserve for unexpired risk given, we will plus. And closing means current year's pre-received income which belongs to next year, so we will minus. You remember this much right now. Whatever is opening reserve for unexpired risk, whether it is normal or additional reserve, will always plus. Opening means last year's pre-received income received for current year, so that is belonging to current year income, we will plus. And closing reserve for an expired risk, we will minus, that belongs to next year. So let us understand this point with the help of fourth question, with the help of journal entries also in detail. Look at it. From the following information given by ABC General Insurance Company Limited, you are required to pass necessary journal entries relating to unexpired risk reserve. Now, on 31/3/15, okay, on 31/3/15. Now you are given with year 15 to 16. So you can say 31/3/15 means last year's closing and current year's opening. Okay, last year's closing and current year's opening. On 31/3/15, it had reserve for unexpired risk amounting to 80 crore and its composition, composition was as under. Out of 80 crores, 30 crores was in respect of marine business, 40 crores was in respect of fire business, and 10 crore was in respect of miscellaneous business. Because it is opening, what did I discuss with you just now? What will we do? Plus. It belongs to current year, so we will plus. All these amounts you will add in premium income. Okay, all these amounts will be added in premium income because they belong to current year. Next, Messrs ABC Limited reserves 100% of net premium in respect of marine insurance business. See, what did I tell you? In marine, if nothing is given, you always take it as hull business and take 100%. For other businesses, 50%. That is what they have mentioned here. Even if it was not mentioned, we would have taken 100% only. For marine, you always assume it's a hull business, and for all other businesses, you create a reserve of 50%. So Messrs ABC Limited reserves 100% of net premium in respect of marine insurance business and 50% of net premium in respect of fire and miscellaneous income policies. This we have to create the closing reserve. For marine 100%, for other businesses 50%. That we will minus. Opening reserve we will add and closing reserves we will minus from premium income. Now during the year 15 to 16, the following policies were conducted. Marine, fire and business, so we'll be doing it in 3 columnar form. If you remember, I told you earlier also, we have to make revenue account in separately for each and every business, but we will be doing it in columnar form. Premium collected, will start with this. Insured, premium collected, insured in respect of policies issued. So this is the main income. This all is one sentence only. This complete is one sentence. Okay. Premium collected and insured in respect of policies issued 36, 86 and 24. Other insurance companies in respect of risk undertaken 14, 10 and 8. This is reinsurance premium accepted. Okay, because it is collected. But here when they say premium paid, I just now told you in the beginning today itself, premium is received. So if they use the word paid, means it is ceded. So here when they use the word paid, means it is ceded. Okay, so what amount is ceded for other insurance businesses? It's given also ceded 20, 10 and 15, that we will have to minus. So here we have to make only the schedule related to premium income to understand the concept of reserve for an expired risk. So all of you write down schedule number 1, premium income. Now very first we'll start with the premium direct business. Okay, direct means this first one. This first one is related to, you can say, direct business. So all of you write down premiums, direct business. In that we will record 36, 86 and 24. Okay, make it in 3 columnar form. All of you pause the video and make the columns in 3 columnar form. Yes, I hope all of you would have done this 3 columnar schedule. Now direct business first we will record, that is 36, 86 and 24. So all of you write down 36, 86 and 24. The figures must be in lakhs possibly. 36, 86 and 24. Okay, because in so less amount, okay, it's in crores, in fact, not lakhs but crore. You can mention at the top rupees in crores. Now in that direct business, whatever is the reinsurance accepted, that we have to plus. Okay, so all of you write down add reinsurance accepted. What all amounts we have to add for the accepted ones? 14, 10 and 8. These 3 amounts we have to add. So if we have done 14, 10 and 8, this we have to add. Then we will minus reinsurance ceded. What all amounts we have to minus for the reinsurance ceded one? 20, 10 and 15 we have to minus. So if we write down 20, 10 and 15 in bracket. Minus means you all write this in bracket. So from this we will get the amount of net premium. 36 plus 14, 50 minus 20, 30. 86 plus 10 minus 10, so it will remain 86 only. 24 plus 8, 32. 32 minus 15, 70. Okay. So these are the amount of net premium, you can say, net premium, after adding accepted and subtracting reinsurance ceded. Now what we are supposed to do, in that we will add opening reserve for unexpired risk. Because opening reserve, what did I tell you, is last year's pre-received income which belongs to current year. So adjustment A, 30, 40 and 10 we have to add. But keep it in mind, 30 is of marine, 40 is of fire and 10 is of miscellaneous. Okay. So 30 we will add in the column of marine, then 40 we will add in the column of fire and 10 we will add in the column of miscellaneous. So after adding that, what amounts what we will get is, okay, we'll add them later on. First we will subtract closing reserve for unexpired risk. Okay, we'll subtract closing reserve for unexpired risk. Now that, as we discussed, for marine we will create 100% and for other businesses we'll create 50%. Okay, for marine. Now what 100% of what amount? Net premiums amount. So this 30's 100%, 86 50% and 17's 50% we will create reserve for unexpired risk. What is 30 is 100%, you'll minus 30, 86 50% you'll minus 43 and 17 is 50% you'll minus 8.5. So these amounts we will subtract. Okay, so that remains 30, 86 plus 40 minus 43, so that will be 83 and 17 plus 10 minus 8.5 will be 18.5. This is the final amount of net premium to be shown in revenue account. So this is how we have to give the effect of unexpired risk. Opening reserves we have to plus and closing reserves we have to minus. Keep this in mind. Opening reserves we have to plus and closing reserves we have to minus. Okay. Now we pass the journal entries for this. So only two journal entries will come. First on 1/4/15, opening reserve for unexpired risk, which is on 1/4/15. For that the entry will come. Now opening reserve for unexpired risk means opening pre-received income. What will be the journal entry for opening pre-received income? It belongs to current year. So pre-received income being a liability, we will close and debit. Okay, pre-received income being a liability, we will close and debit. So reserve for unexpired risk account debit. I repeat, why do we debit that? Because in bracket you have to mention marine reserve for unexpired risk account we have to debit because it's a liability. That income belongs to next year. So last year's liability, now we have to take it in the current year to close that liability, which is a credit balance, we reverse and debit. So reserve for unexpired risk fire account debit, and then reserve for unexpired risk miscellaneous account debit, and we'll transfer it to which account? Current year's income. Credit all incomes and gains. So we'll transfer it to revenue account of marine. As we discussed, we have to make separate revenue accounts for all. To revenue account of fire. Fire's amount will transfer to fire's revenue account, and to revenue account of miscellaneous. So separately we'll transfer it to all the miscellaneous, all the revenue accounts. What all amounts? Opening reserves means these amounts. Which amounts? 30, 40 and 10. Okay. 30 crores, 40 crores and 10 crores. Okay. Rupees in crores. Rupees are in crores. So marine's 30 will transfer to marine's revenue account. Fire 40 will transfer to fire's revenue account. Miscellaneous 10 will transfer to miscellaneous revenue account. B. Opening reserve for unexpired risk transferred to revenue account. Now closing reserve 31/3/16. What entry will pass for closing pre-received income? Income account debit to pre-received income. So revenue account debit to reserve for unexpired risk account. Okay. Closing reserve you minus means you have to decrease the income. To decrease the income, we will debit the revenue account. I repeat, to decrease the income, we will debit the revenue account. So revenue account of fire. First is marine. Revenue account of marine. Debit. Then same way revenue account of fire debit. And same way revenue account of miscellaneous debit, and we'll transfer that amount to reserve for unexpired risk. So to reserve for unexpired risk of marine account, to reserve for unexpired risk of fire account. 2. Reserve for unexpired risk of miscellaneous account. Now what amounts? Closing reserve, as we have calculated these amounts. Which amounts? 30, 43 and 8.5. Okay, 30, 43 and 8.5. So 30 crores for marine, 43 for fire and 8.5 for miscellaneous. Okay, 30, 43 and 8.5 being closing reserve for unexpired risk created from revenue account. Okay, being closing reserve for an expired risk created from revenue account. Totaling is not required. This is just to understand the concept of opening and closing reserve. We have passed this entries. Now full-fledged questions on revenue account and then revenue and profit and loss account we'll understand in the next lecture. So 2 questions we have covered in the today's lecture, question 1 and question number 4. Both of them just the basics of revenue account, how to make for general insurance company. That will be all for this lecture. More practice we'll do in the next lecture. Bye everyone. Take care. See you in the next lecture.